Top of the morning to you, ladies and gents. Welcome back to another episode of Silverstones. My name is Joran Headley, and I'll be your host for today's show, where we're going to be talking about the importance of getting good advice in cryptocurrency and Bitcoin. So there's a few reasons why I wanted to make this video, but the most important thing is here to help you understand the difference between Bitcoin and cryptocurrency, because there is a huge difference. And I think that the mainstream narrative right now, whether that's through the media, through financial institutions, from the government, whatever it may be, they kind of want to lump everything together into one group. And I think it's very important to differentiate between Bitcoin and cryptocurrency. And I also want to say a couple of things. There's a few precursors here that I have to say, unfortunately, just given the nature of everything happening right now. But the first thing is that nothing that I'm about to say is financial advice. What I really implore you to do is to take things in and then do your own research in terms of what kind of sparks your interest, what resonates with you the most, and go from there. So don't watch one video and bet the farm on that asset. Make sure you have sufficient amount of work that goes into any sort of investment that you make, whether that's crypto, whether that's Bitcoin, stock market, real estate, whatever it may be. Make sure you have a very good understanding of that specific asset before you put any of your hard-earned money into it. So I want to start with that. Another thing is, I want to talk about my journey and how I got into Bitcoin, how I got into cryptocurrency, and maybe shed a bit of light on the importance of good advice from my perspective, because now I'm kind of on the other end of things where I'm consulting with people, where I'm doing a YouTube channel, a Patreon, and that comes with a lot of responsibility. But there was a time about 2 years ago where I was on the other end of this. And even as a guy with financial background, as a CPA, when I started looking into cryptocurrency, I was overwhelmed. There's a bunch of advice on the internet, but it's easy to find. You can type into Google, you can type into YouTube, whatever it may be, you can find what you're looking for. But it's very hard to find good advice, and from somebody who you can sit down across the table from and have a conversation with, set up a Zoom call with, whatever it may be. But it's hard to find good advice, I think, in this space. And one thing I've always preached from the beginning of this thing is not the financial incentives of getting into this. It's the separation from the control and the centralization that we've grown up with our entire lives. And the main core of that is holding your own cryptocurrencies. And there will be a lot of people watching this who aren't at that stage yet or comfortable doing that, and that's totally fine. But my message from the beginning of this has not been chasing profits. It's been, like I said, decoupling yourself from the centralization and holding your own Bitcoin. So I want to make that clear. But back to my journey, I actually didn't start with Bitcoin. I started with a cryptocurrency project called Theta. And I got into Theta because I had done a bunch of reading, watching, and learning about Theta. And I was overwhelmed with the technology, the patents, utility that they had. And I really wanted to get some Theta as soon as I could. And as I said, even as a guy with a financial background who understands this kind of stuff, I had a very hard time understanding the different language and the different networks, and just kind of the whole thing moving together was very difficult for me to understand. So I knew that I wanted to invest in this project, but I didn't know how to buy it. And at the time, it was a lot more difficult, I think, to get into cryptocurrency. You couldn't simply set up an account and e-transfer an exchange, and in return, you get Bitcoin, which is kind of where we're at now, which is great. I think that the easier it is, the more people will get into Bitcoin. And obviously, the bigger the market cap will grow over time. But at this time, it was very challenging to purchase Theta and Bitcoin. So instead of making an error right off the bat, and I realized that I didn't want to lose all my money that I wanted to invest in Theta. So I actually found a guy that I had been listening to. I signed up for a private membership. It cost me about $400 or $500 US, I think, for a 1-year subscription. But I knew exactly what I was doing. And he had videos showing it. He had documentation step by step. So it was something that I knew would be very useful to me. And to this day, it was the best investment that I've made in cryptocurrency, was just making sure that I had a great foundation and I wasn't making any critical errors off the start. So I wanted to mention that because I think that there's probably a lot of people who are in that situation right now where they kind of understand the technology, blockchain technology, Bitcoin as an asset, as a network. In some way, they realize the importance of it, but they're scared to take the first step because it is a scary place. And if you don't have somebody holding your hand through the journey there and giving you advice in terms of not what projects to go into, but what platforms to be using, which exchanges that you can trust, which devices that you can trust to hold your Bitcoin on, I think it's very important to invest in that. And whether that's through me or somebody else online who you trust, I think that that's a very important first step, is making sure that you get good information. And same as anything, you get what you pay for. So you could go onto YouTube, you could spend a bunch of time figuring it out, and you could probably do it, but it's going to cost you a lot of time. And the advice itself, I don't think has as much backing as somebody who you're giving money to. With that in mind, not everybody who you're giving money to is working for you or in your best interests. And that's something that we've seen recently with the FTX. And I'm going to straight out say what I think about this. And it was a Ponzi scheme. It's complete fraud. And it's something that the more we can get rid of at this stage, I think the better off we'll be long-term. So I'm going to quickly explain at kind of a higher level exactly what happened with FTX and the difference between that and Bitcoin. So FTX was an exchange that opened up where you could basically send them your money and they would invest that on your behalf. They would hold your crypto within the FTX platform. So if I was an FTX user, I could deposit $100 into the FTX exchange and purchase Bitcoin. They called it anyways. And maybe before going any further, at the end of this whole situation, we found out that they claimed to have $70,000 or 70,000 Bitcoin on their balance sheet. And after they got exposed and everything came out, all the truth came out, they actually had 0 Bitcoin on their balance sheet. So people thought that they were buying Bitcoin and holding it within FTX, but it turned out that they were just buying, FTX was using their money to gamble and invest in other projects. And so FTX is a very centralized exchange. There was a CEO, there was a whole team of people doing this. But the point here is that people who deposited money with FTX, they trusted in FTX, and FTX took their money and invested it and gambled in other projects, in other companies, and in their own best interests. So far, we've seen that they were connected to a company called Alameda Research, who they're kind of funneling back and forth money with. The political parties in the US were kind of using this almost to launder money in a sense. And as I said, I'm not going to sugarcoat anything here, although this hasn't been proven in court. I think it's fairly obvious at this point what was going on. It was being used to fund certain parties of a war that's going on overseas. And it was used to purchase the family houses and real estate in the Bahamas. So people thought that they were their funds were being used to earn a return and yield and everything like that, but they were actually being ripped off. And it was a fraud. It was a Ponzi scheme. That's what that was. They actually issued their own token called the FTT token. And so the FTX exchange issued their own token called the FTT token, and they were actually using that as collateral, as security to get more financing and gamble with more money. So I think that's a very important point, because they were able to just create these FTT tokens out of thin air. And any project who is doing that, in my opinion, is a Ponzi scheme. So good advice ties into this, because if you had somebody on your team who knows the ins and outs of this stuff, they would never advise you to put your money into a company or an exchange like FTX. So now let's look at Bitcoin. And I want to talk about a few things in terms of what Bitcoin is and the main benefits of it. And then we'll compare it to the FTX and the FTT token. So Bitcoin itself is very decentralized. So it's made up of tens of thousands of computers around the world who are verifying transactions on the Bitcoin network. Think of Bitcoin as money and think of the Bitcoin network as a giant ledger of transactions being recorded that can never be changed. Because the reason it can't be changed is every 10 minutes, every computer across the world who has this Bitcoin software, they're verifying it, and it spits out the new updated version of the blockchain. And so if you wanted to change one transaction in there, you would have to change it on every single node around the world. And so as this network continues to grow, which it has, it becomes more and more difficult to try and change anything on the blockchain. So that's why they call it immutable, because it cannot be changed. So every transaction that happens on the Bitcoin blockchain is recorded, gets sent out to every Bitcoin computer running on the Bitcoin network. And so that's how they're verified. So it's decentralized. And compare that to FTX, which was centralized. Compare that to our current monetary system, the central banks, which is centralized. Bitcoin is fully decentralized across the world. So that's one thing. The second thing is that Bitcoin has a fixed supply of 21 million Bitcoin that will ever be mined or created. People think that Bitcoin gets mined like it comes out of the ground. It's actually just new Bitcoin being created and put into circulation. And when the Bitcoin network itself verifies these transactions and forms a new block, a block reward is given out to whoever solved the equation. So without getting too complicated, every time new Bitcoin is created, it gets sent out to the miner who verified the block, and then a new block begins with a bunch of new transactions on it. And that's why it's called the blockchain, because it's one block gets sealed, and then another block begins, and it's a chain of blocks, and that is the blockchain. So didn't really expect to explain that on here, but I think that it ties in for sure in terms of just getting a good understanding of what Bitcoin is. So Bitcoin, as I said, has a 21 million fixed supply. Currently, they've already created or mined 19.2 million Bitcoin. And so for the next 120 years, the next 1.8 million will be created and put into circulation. And kind of the importance of this is that because it was so front heavy, the 19.2 have already been created because the code says that the supply goes down every 4 years, it gets chopped in half. So that means that a bunch were released early on, and every 4 years, the supply gets cut in half. And so as time goes on, the supply decreases. And so that's why there's already 19.2 million created in the first 13 years versus the next 1.8 million over the next 120 years. That has to do with the halving schedule of Bitcoin. Regardless, you think about that, the fixed supply, the Bitcoin code has never been changed in 13 years, and it would need a 51% attack for somebody to change that. And as the network grows, as the market cap grows, it becomes harder and harder for somebody to obtain 51% of the network. So although it's not a certainty, I think that it's a pretty good bet that this code will never be altered. And you compare that to FTX now. So FTX had no fixed supply. They were creating these tokens out of thin air, and they were using it to, like I said, take on more debt. They were using it as collateral to take on more debt, to gamble with, to invest in, whatever they were doing. But it had no fixed supply, and they were able to create it without any sort of energy going into it. And also compare that to our monetary system now, where we do not know how much supply there is in terms of like Canadian dollars, US dollars. We have an idea, but we don't know the exact amount. We don't know a schedule of how much they're going to be printing into the future, with new wars happening, with new illnesses happening. They kind of have an excuse to print as much as they want without any sort of schedule or our say in it. And so we have no known supply, we have no fixed supply, and we have no schedule that we know future supply. Bitcoin, we do. And the final thing here is that the Bitcoin currency, the mining, requires energy. So it kind of ties the digital world with the physical world, in the sense that although you can't hold a Bitcoin, it takes physical energy to be created. So even the creator of Bitcoin, Satoshi Nakamoto, we don't know who he is. Personally, I don't care. I think it's better that we don't know who creates something, because then there's no political affiliation or any sort of preconceived notions of what it is. It was a technology that was given to the world, and Satoshi basically walked away. But anyways, Satoshi himself did not give himself any Bitcoin, because you cannot just create Bitcoin. It requires energy to go into it. And what does that mean? There's, like I said, there's a network across the world of computers who are working to mine the next block within the blockchain. And those computers require energy to go into them. And if you don't have energy, you cannot create Bitcoin. Compare that to FTX. Once again, they did not need any sort of energy. They did not need any sort of verification. They were just able to create new FTT tokens and issue them how they see fit. And it's not very hard to do. A year ago, when I was about half as familiar with the technology and everything like this, I created my own tokens called the King tokens, which were from our golf company, King Golf. And I was able to create 88 billion of them, I think. And so they weren't used for anything, because there's no utility there. There's no use case for them, so nobody would ever pay for them. But in this case, they tricked people into thinking that there was value within them, and they were this huge growing company. And so at the end of the day, for the third or fourth time, it was a complete Ponzi scheme. And I hope this guy, although a free man right now, I hope he spends the rest of his life in jail, because there were a lot of good people who lost a lot of their money by trusting in this company. So that is the difference between Bitcoin and FTX and other cryptocurrencies. FTX isn't the only one doing this. We've seen a few other exchanges and a few other tokens go down recently. And I expect in the coming months or years, even more at a larger scale. So this negatively impacts Bitcoin's price, of course, because of the fear, uncertainty, and doubt, and especially when the mainstream media is pushing that every day to people. They have this perception that Bitcoin is somehow related to FTX. So with that in mind, I think it's important to talk about the price a little bit, because it is important. And one thing to know about this whole situation, chair's moving on me. If you held your Bitcoin in your private wallet, which is the number one priority for me and for whoever I consult with and on all these videos, is make sure you have your Bitcoin in your own possession off of the exchanges. So if you had your Bitcoin in your own private wallet for the last 3 weeks or for the last month, you were not impacted by the FTX situation at all, other than the price, which is unfortunate. My portfolio is down a little bit since the FTX thing happened. I actually thought it would go lower, but none of my Bitcoin was affected. They're safe and sound in my cold storage wallet, and the FTX had nothing to do with it. So if you keep your Bitcoin off of the exchanges, there's nothing to worry about. None of this has anything to do with it. It's just noise. And the price itself, there's something that we've seen Bitcoin go from $69,000 a year ago down to, what is it, 17,000 today? That's a huge drop. I'm not going to sit here and pretend that's not a big part of everything and the narrative and everything that's happening in terms of the price and the narrative and the perception of Bitcoin. It's a huge drop. And I think that if you're not in a position to be investing in Bitcoin for the long term, you should not be in it. And that's another thing. Aside from getting your coins off of the exchanges, one thing that I tell people, everybody I talk to, is that this isn't something that we're going to be in for a month or two and then cash out. I see it over 5, 10, 20 years. And that's kind of the timeline that I have for Bitcoin. And even beyond that, I'll probably never sell my Bitcoin. I'll just use it as collateral and exchange it at the bank for dollars, in terms of using it as security to take on dollars. So that's a whole nother conversation. But the important thing is that if you've held Bitcoin for more than 4 years, you've never lost any money. And that's just the cycles of Bitcoin. It happens in the markets. Bitcoin is a little bit different because it follows the halving schedule, or the supply gets cut in half every 4 years. But if you've held your Bitcoin in your own private wallet for 4 years, you've never lost money. So keep that in mind if you're wanting to get into Bitcoin. that it's a long-term view, not a quick get-rich scheme. I think that's important. And I think that I just kind of want to finish here with how much I believe that you should invest into Bitcoin at this stage. If you're just getting into Bitcoin, it's one heck of a time, because I don't know if we're at the bottom yet, but buying Bitcoin at $17,000 will get you a lot more than buying it at $69,000. And smart people understand that, but I understand the fact that there is a lot of fear in the markets right now. And I'm hoping that this video kind of helps with that. So if you're somebody who's been wanting to get into Bitcoin, I don't think there's ever been a better time personally in terms of price compared to the value of the network. So even though Bitcoin was a lot cheaper 10 years ago, there wasn't any sort of community, there wasn't sort of any adoption. The network, Bitcoin network itself, was a fraction what it is now. We see companies like Fidelity in the US, which is, they manage trillions of dollars of investments. They've adopted Bitcoin. We've seen countries, El Salvador, they've adopted Bitcoin. So yes, the price is more than it was 10 years ago, but there's so much more security, I think, and overall, what's the word I'm looking for here? Just strength, I guess. Like, it's the network and the currency itself is so much stronger than it was. And so, like I said, if you've been wanting to get into Bitcoin, I think now is the perfect time to be doing so. Not financial advice, just logic. So how much should you allocate? That's a good question. That's a question that I receive on not a daily basis, but when I talk to people, they ask, how much should I put into it? And I usually tell people, start with $100, start with $200, just play around with it. Get your toes wet. If you like how the feeling of it, do a little bit more. If you don't, consider it an investment in your learning, I guess, and education, just trial and error, right? So $100, $200, and I would never recommend anybody allocating more than 5% of their total portfolio into Bitcoin when they're just getting into it. And there's a lot of reasons for that. Although I'm a huge believer in Bitcoin, I've never once in the last year or in the last couple of weeks considered selling my Bitcoin. I think that you have to learn, you have to go through the process of learning, of experience things like this where there's a huge price drop. You have to learn how to send Bitcoin back and forth. You have to experience those things before you truly understand Bitcoin and can confidently invest more than 5%. So that's kind of what I would tell people is, don't ever put in more than 5% of your investment portfolio into Bitcoin off the hop. If you spend a couple years in the community and the industry and learning more, and you're like, this is for me, you can put more in then. So that's my advice on it. And this video, I didn't know how long this was going to be. And we're about 20 minutes in right now. So I'm going to end it here. If you're still here, if you're still with me, that means you give a shit. It means that you're trying to learn, you're trying to understand it, and you want to take things to the next level. So what I'm going to recommend here is 3 things. Continue doing your own research online. So even though you don't have to necessarily follow anybody's investment advice in terms of what to get into, just start watching some videos on Bitcoin and the technology, and listen to different people talk about what it means to them. And some people, you'll notice that they'll resonate with you more than others in terms of what they're talking about and what their language is like. But just kind of immerse yourself for at least 50 to 100 hours worth of learning about Bitcoin. And you don't have to start there. If you want to get going right away, I understand that. I was the same way, to get my toes wet. But I think that's a pretty good place to start. And so you can watch this channel. You can find other people online who are talking about Bitcoin, but just try to learn as much as you can about it and get a better understanding of the ins and outs, because a 20-minute video cannot do that. As much as I think, I know what I'm talking about, you have to explore other people, listen to their perspectives and what it means to them. So the second thing is I'm going to be launching a Patreon channel in the next month or two, where I'm going to have the exact steps that you need to take from here to the very beginning to where you want to be. So that will include explaining the difference between wallets, exchanges, how to move back and forth, just everything that I think you'll need to know as a beginner who's just getting into Bitcoin. It's going to be very inexpensive. It's going to be about $5 to maybe $7 to $10 per month. And it's going to have a whole library on there of videos that you can consume at your leisure. And also it's going to have instantaneous access to my personal email, which I'll be responding to any time of the day, or my phone number. I probably won't give my phone number, but email for sure. And so you'll have 24/7, mostly, interaction with me and be able to contact me. And so if you're going through something right now, if you're trying to buy Bitcoin, move Bitcoin, download a wallet, and you're having troubles, you can just shoot me an email and I'll answer you as soon as I can, within a day for sure, or within an hour. No promises yet until we know the the whole plan here, but that's something I just wanted to point out for people who are interested in learning more, that's going to be available very soon. And actually, I'm going to have another tier too, where I'm going to have the ability to have a meeting with me once a month if that's something you're into. So it'll be about half the price of my usual consultations, and we'll schedule it once a month, and we can just kind of catch up, see what you've been doing, see what you've been learning, and I can answer any questions that you have. So I think that I'll be bringing a lot of value to people who are kind of at this stage of the game. And also keep in mind that when I'm helping people, I don't earn any sort of commissions from the exchanges or them buying Bitcoin. It's just basically my experience and knowledge that I'm giving to you. And so that's kind of what's worked into the price, because there won't be any sort of ongoing fees that I receive for this. So just something to keep in mind there. And finally, as I mentioned, you can book a consultation with me anytime. I have a Calendly link. I'll probably put it under this video in case anybody does want to book a consultation with me. I'm very flexible in terms of my time frame and the topics. So whether you want to book a consultation for 30 minutes, 1 hour, 2 days, I can facilitate that. So time's flexible, and any sort of topic you have, any questions you have, we can do that on there. So I appreciate you very much, especially if you've stuck around this long. If you have to watch this video a couple times to fully take it in, what I've been talking about, and then maybe come back to it in a couple weeks once you've spent a little bit of time learning about a few different resources online. But either way, I hope you got something from this. Make sure to like the video. It would mean a lot to me. Subscribe to the channel if you've learned anything from me so far or got anything from this video. And my website's right here. My voice is running out, silverstones.ca. You can check out everything I got to offer there. And share this with anybody. Share this with anybody who doesn't understand the difference between FTX and Bitcoin, holding your coins on an exchange versus holding your Bitcoin in your own private wallet, and people who are maybe too focused on the price in terms of the future of this technology. So I'll leave it there. Thank you very much, and we'll talk to you soon. Bye-bye.